Well, we're going to keep an eye on stock futures this morning, one day after GM and other U.S. companies gave updates on how much tariffs are impacting business. Right now, the futures are up after President Trump announced a trade deal with Japan. The stock market opens in about 15 minutes. We'll let you know exactly what that does and show you the opening as it happens. Well, GM is giving us a look at the impact on tariffs on the industry. As you look live right now at the RenCen automakers headquarters there, the automaker banked $3 billion between April and June. That is $500 million less than its first quarter earnings. GM says it took a $1 billion hit from President Trump's tariffs as efforts to offset those tariffs. They haven't really fully taken effect yet. We're going to get updates from Ford and Stellantis next week. Joining me now to talk more about this, auto analyst Sam Abu Al-Samid. Thank you so much for coming in. This really is no surprise. I mean, we knew this was coming. The $1 billion hit, though, I think maybe kind of took some people off guard. What do you think?
I don't think it took anybody in the industry off guard. I think everybody was expecting that. The reality is, tariffs are paid by whoever's importing a product into the country. It's not paid by the country where the products originated from. And the automakers have been working really hard to try to avoid passing on those costs as much as possible to consumers, at least through the first half of the year, while there was still a lot of uncertainty, a lot of back and forth on what the tariff rates would be, which countries would be hit by tariffs. So we saw certainly the Detroit automakers doing deals, to keep prices down, do employee pricing programs. And that inevitably, those kinds of incentives inevitably lead to a hit to the bottom line. And they were trying to move as many vehicles as they could before the tariffs hit, from the vehicles that they had in inventory.
Right.
Now we're getting to the point where the vehicles that had been built, that have been sitting on dealer lots, that inventory is starting to get depleted. As we get into the second half of the year, it's going to become a lot harder for those kinds of deals to continue. And so what we will likely see going forward in the second half of the year is the vehicles that are imported, we're probably going to start seeing some gradual price increases. We've already seen some announcements from companies like Toyota about some price increases coming the second half. We'll probably see that from other automakers over the next couple of months as well.
So as we start to lose inventory that was made with, we'll call it, the old tariff model.
The pre-tariff.
Yeah, pre-tariff versus what we have now. What's the timeline then? Are we talking 6 more months, another year before we see those prices go up?
No, I think we're going to see that starting in the next month or two. Oh, wow. It comes down to every company, how much they think they can afford to absorb in terms of those tariff costs.
Right.
For some companies, those price increases are going to happen a little bit sooner. For others, they may be able to hold off a little bit longer, depending on where their margins were to begin with.
Yeah.
So companies like Stellantis, which reported a $2.7 billion loss for the first half of the year, and has had significant decline in sales in the first half of the year, it's going to be a challenge for them to hold the line on pricing.
Yeah. So prices go up to offset the cost of the tariffs. Is it enough? Or do you think we'll start seeing drastic shifts in production or job cuts or plant closures to try to offset these other costs?
Yes, all of the above.
Yes, and yes.
I mean, we've already seen some. The announcement that we saw from GM in the last month or so about their investment in their Tonawanda engine plant to build their next generation V8 engines, and then the $4 billion to retool several assembly plants. Most of that appears to be a shift of production that is currently happening in Mexico into U.S. plants. So moving some truck production from Mexico to Orion and adding some additional capacity there for full-size SUVs that they currently build in Texas, in Arlington. And then also moving the gas Chevy Equinox production from Mexico into Fairfax, Kansas, moving some other production into Spring Hill, Tennessee. So that's primarily, I think, in response to tariffs, bringing some of that vehicle production into the U.S. Now, along with that, that's going to save them money on tariffs, but there are going to be some added costs because it does cost more to build those vehicles in the U.S. than in Mexico.
Right.
So there's going to be a balance somewhere in there. So that everybody's going to be looking at, okay, where do I have available capacity that I can utilize, and figuring out what's the best balance to minimize both their cost increases and the price increases.
So, when President Trump was initially talking about the tariffs, the first and foremost thought that he was pushing was that this will bring more manufacturing jobs back to the United States. Going off of that, is this working then, or is there a gotcha moment on the back end?
Well, as I said, bringing those jobs and that production back into the U.S. Will have some benefit, but it comes at a cost, increased manufacturing cost for those products. And it's not just in the auto industry, but just broadly. Anything that is being produced outside of the U.S. Is usually done that way because it's cheaper. So bringing that cost into the U.S. Will lead to price increases. That in turn will lead to some reduction in sales. And so again, there's going to be a trade-off there. You're going to have some lower sales, more of the higher percentage of the vehicles will be built here, but there will probably be fewer vehicles built in total, or fewer vehicles sold in total, and that will probably lead to job losses.
Right. Okay. So GM, $1 billion loss, they can absorb that for now. Stellantis in a different boat. Where's Ford?
Ford, up through the first half of the year, had some increase in sales, but as with GM, I think that was mostly a pull ahead, because of the deals that they're doing, and consumers concerned about potential price increases. Buying, if they have the ability to buy something now that they think they were going to buy in the second half, they pulled that ahead. So I think in the second half of the year, we will see some tailing off of the sales increase that we had in the first half of the year. Overall sales in the first half of the year were a little less than 3%, up a little less than 3%, about 11% for Ford and for GM. Stellantis was down. So we will probably see some reduction in sales in the second half as some of these price increases start to hit.
We're out of time, but I have to ask you one more question on EVs. There was a big push for it, and probably, I guess you could say, numbers that they thought in sales, right? Kind of overestimating what sales were going to be. What did that do in terms of where the automakers are now? Because now they have to go backwards and retool plants to go back to making more engine vehicles.
Right, and this is one of the cost increases that the industry is facing, because for any of these companies that want to continue to compete outside of the United States, they cannot back off on developing EVs, and so they still have to build EVs.
But that's competing outside of the U.S.
Right, but that's a cost. Ultimately, all of their costs for General Motors, or for Ford, or for Stellantis, comes down into the bottom line, regardless of where those cars are being sold. If they have to continue to develop internal combustion vehicles, hybrid vehicles, plug-in hybrids, and EVs, that's adding to their overall costs. So maybe, in the U.S., our EV sales are probably not going to be where it was projected a couple of years ago. My own forecast at Telemetry, we're forecasting a little more than 20% of the U.S. market will be EVs by 2030, which is up from now. We do expect it to continue climbing, but at a relatively modest pace. But with the other things that they have to continue spending money on, that's going to increase costs overall. And again, as with just reshoring production in the U.S., that is ultimately going to lead to some price increases.
They've got more cost and we have to pay for it.
Yep.
Okay. Sam, thanks a lot. Appreciate your time today. Thank you very much.